For the first time in nearly 2 years, the average home price in the Central Okanagan is below $1 million. But does that mean that houses are more affordable? The Central Okanagan real estate market experienced some big swings in the last 12 to 18 months, with prices peaking in the spring of 2022 for about 4 or 5 months. Today, the average single-family home price in my market continues to correct and has dipped below 7 figures to $947,000 in January of 2023, which is down from the peak of $1,281,000 in March of last year. That's a dip of over $300,000. But you know what? The benchmark price is still up 43% from 3 years ago. The good news is that we know real estate appreciates in the long term. And if you bought during the last year, prices will eventually go back up. And with each mortgage payment that you're making, you're reducing your balance and creating equity. And don't forget, you've got a roof over your head and a place to call home. If you're a first-time buyer, this is the scenario you've been looking for. But are houses actually more affordable today than they were, say, a year ago? In March of 2022, the typical fixed-rate mortgage was about 2.99% after the First Bank of Canada rate increase. And with an average home price of $1.281 million, the monthly payment was about $6,000 if you mortgaged the full amount. Today, even though the rate is somewhere around 4.79% for a fixed discounted rate, the monthly payment is about $5,400. That's a difference of about $600 per month. So yes, houses are more affordable today than they were a year ago. But with current rates, if prices inch up again, that $600 a month savings could disappear pretty quickly. If you've been on the fence about buying a home, you should really consider your options today at these prices. Another benefit of home prices dipping below $1 million is that you no longer have to put down at least 20% on your purchase to qualify for a mortgage. You can get an insured mortgage in most cases with as little as 5% down, which will reduce your costs of getting into the market. And it's not all bad news if you're a current homeowner. If you're in an equity position and looking to downsize or right size or upsize, prices are all relative. Yes, your prices come down a little bit, but so is everything else that you're going to be looking at. There's going to be so much opportunity in this market with prices decreasing and inventory growing. If you're looking in the condo market, prices there have slid to $470,000 on average from the low to mid $500,000s in recent months. However, townhomes and semi-detached homes have been relatively stable with an average price of around $720,000. Townhomes didn't experience the hyper appreciation that single-family homes did, so they didn't go up as high, but they also didn't have as far to come down. The market has experienced a correction and somewhat of a soft landing. As it gets busier into the spring months and buyer demand increases, we'll see what happens to prices. And we'll have to keep an eye on what interest rates do as well, because they could have an effect on pricing in the market. It's all down to supply and demand. That's my market update for this month. Thanks for watching. If you found any value in this video, please subscribe and hit that like button so other people like you can see this video too. We'll see you next time.